Good morning, everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday. Let's see, what are we? We are the 5th. Thursday the 5th. Pleasure being with you today. Welcome to a post-election market that is up roughly, roughly about 5%. Pretty amazing. I'm a little shocked. In fact, I'm going to go over that in a minute, but I found an article that scared me, especially since we have the Fed rate decision today. And since I'm thinking about, I don't know, what's going on and what's happening in our markets and so forth, negative interest rates is, in my opinion, will destroy our financial markets. That is my belief. It's what I see when I do my calculations. The Fed, in that first sentence, it tells you, it writes off the idea. But we have someone here who did an interesting comparison and talks about Europe and the United States. Now, we are separate. It's not an apples to apples comparison. The understanding is, though, our Treasury will not give a yield, which, I mean, it kind of doesn't already, let's face it. The 10 is a 0.8 as of October 2020. I think we're what, 1.4 or 6 maybe for the 30-year. You're not going to make anything on your Treasury investment. In fact, it's awful. It's killing the bond market for all intents and purposes. It's killing, well, it's making it real easy for the U.S. to borrow money. Let's face it, we're getting tons of money in, but then it runs the risk of having a couple countries like China dump their treasuries, in which case the value or interest to trade them or buy them goes down even more. If you'll notice, last week there was a couple articles and people are noticing that China was dumping their U.S. treasuries. Once again, maybe trying to lower the rates for the bond sales that were happening this week, and also maybe put a little bit of pressure on the Fed. Just an interesting thought there. But let's face it, the safe haven has no yield when it comes to U.S. treasuries. That's a benefit because we're borrowing tons of money and we're doing it at a ridiculously cheap rate. I don't see a problem with that. I also like the fact that since there is no yield or gain, people are going into the stock market. They're going into stocks. They're going into something that can give them a possible return. I guess the short answer is really they're looking at what risks they can take to beat a U.S. Treasury, and in 1 year to get maybe 20 years of U.S. Treasury returns. If that makes sense, if we're looking at a 0.8% on the 10-year, if you get a 1.6% return, you're going to double the 10-year rate or return on a Treasury. Well, Kevin, that adds up to like 8% over a 10-year period. So if you get a 16% return in 1 year, it's like getting 20 years of payments on a Treasury. The risk to reward ratio is pretty interesting. I like negative rates, what they are. When rates go negative, it means that banks depositing money into central bank must pay to keep their money there. The only part of negative interest rates is it will force the government. The government will force the banks to lend out this money. I would love to refinance a house. I'm in a 6 1/8%, not really good. I had a rental house at a lower interest rate than my main home. And for crying out loud, I'm just not able to get it refinanced yet. This would push money out to refinance. Even at these lower rates, it beats having a bank lose money by having it sit with the Fed. Negative rates don't appear to be helping overseas. Duh. Really, I'm going to go to the last little part. If I can just read this, and I think it's kind of funny. Sometimes you seek a return on invested capital. Other times, your overriding concern is the return of invested capital. It's the last sentence there. Some people, especially since a 2008, a 2000, they just want their money back. I think that's why we have seen the lower volumes when it comes to money that's invested in the stock market. Generations aren't worth, how am I going to say this? Generations don't see the worth in taking the risk of putting their money in the stock market. They just want to get their money back, even if it doesn't make them anything. I'm shocked when I see people putting money into a savings account. 0.25%, really? There's no return there. The risk is buying a tangible asset and not being able to sell it for more money. I'm talking to my kids, trying to teach them a little bit about savings. More importantly, for my older boys, it's like, you know what? You guys should go buy some chainsaws. You guys should go buy yourself a trailer. It's time for you guys to invest some capital into a business and go run and work from there. Just a thought process, and it's pretty interesting to see what people are thinking. All right, with that said, as I was looking at some trades, for us, it's time to dollar cost average our leaps. Yesterday, as you can see, this is yesterday's chart. Yesterday's chart, we could not get over the 50-day. The 50-day sat at 116.37. Now, I think it's kind of interesting. I'm going to lower the I'm going to only go out to 6 months, and we're going to see today's movement on Apple. Let me update this. Apple today is clearly over the 50-day. Historically, when you get a bounce off of a 50-day or break above it, it normally has this kind of gap where it could shoot up. Because it's above, it's kind of creating a doji. I might wait one more day, but it's time for us to possibly take off our protection on Apple. We do have quite a few positions that could use some dollar cost averaging. If I take a look, Apple has some puts on. Ooh, I probably need to take half of those off. I'm not quite ready to man, I'm struggling. It's hard when we don't have our election called. Who would have thought gridlock would be what the markets are looking for most? Gridlock. Very interesting, because gridlock is not what my expectation would be for our stock market. I am shocked to see that gridlock is moving our markets 5% after the elections. That just doesn't make sense. So Apple, the puts, plain and simple, we have some protections at $13.75, not even a full $5, but we do have the bounce. I will probably wait until tomorrow. With only having $1.97 in them, it seems better if maybe I created if we just moved it up to like 115. 115, we could get more money than what is left in that put. It's my thought processes for a couple of weeks. Why not try to make more money than it's there? But I will most likely need to see it prove itself over really over the weekend. Excuse me, over tomorrow. I would want to put this on before the weekend so I'd be in good shape and I get some time decay over the weekend. Trying to think straight here. Banks are bouncing back. Banks took a horrific hit after the election. I still have my protection on the banks, and I will probably keep those through the 27th. Baidu, for crying out loud, Baidu does not have a confirmed, at least it didn't as of recently, a confirmed date for their earnings. I really would like to see Baidu confirm their earnings. It's now estimated out to the 12th. These buggers are kind of making it a little difficult, but look at Baidu trading up at 144. That can't be right. Is it really that way? Wow. What a run on Baidu. Let me check to make sure that is correct. 144. An amazing run, and they're going to run to 150 before their earnings. Bingo. I love it. I love it. I love it. All right. If I was looking at trades, I'm going to go pretty general, and we're going to do it across the board. Leaps to test the water, to make it cheap. Leaps on Visa, Facebook, Boeing, and Baidu. Those would be what I'd be looking at. Baidu would be my favorite because we can make some great money on Baidu. There are, well, I'm looking at the leaps we have, and they're all doing really, really well. So if you're looking for a trade, you've got to test the waters. Go to a leap, something that's relatively cheap. That's what I'm going to tell you. For us, we're looking to dollar cost average those leaps. So I would be looking at leaps for Visa, Baidu, Boeing, or Facebook for post-election trades to test the waters. This is something that you're really just looking at between now and the end of the year. And guys, that's all I have for you. It's rather interesting. The decision on what to do is there. You gotta walk gingerly. It makes no sense to not be protected or to take the risk right now. So definitely be smart in what you're doing. One contract, don't go all in. It's not smart. Guys, next week I will be in Salmon, Idaho. Key will take care of the Monday, Tuesday nights. Guys, have a good one. Enjoy your weekend. Welcome to Gridlock. And I think we're going to be in great shape, guys. Talk to you later. Bye-bye.